Good morning, everyone. It's Monday morning. I'm Vince Lancy. It's 7:21, and we have a bunch of stories to go through. We're going to touch on two of them, and we'll just give you an overview of the rest on the screen. Top left-hand side is Hartnett, long gold as an anarchy hedge. This is primarily about bonds, but in his BIG thesis, own bonds, own international stocks, and own gold. Well, he's not saying to own bonds anymore. He's also not saying to own stocks in general anymore. And that leaves the G, which is gold. Top right hand side, Geopol Mineral Wars. That's an impromptu 8 or 9 minute podcast we did, uh, trying to tie together for everyone the implications of things that were said by people like Josh Fair at Scottsdale, people like myself with regards to the mercantilism factor, and all the news items that have been out there regarding the protectionism of minerals and what it really means. Gold's intrinsic value and how not to be a turkey. Great title, not my title. Great title. How not to be a turkey refers to everyone believes in fiat until it's too late. So the 1,000 day plus one turkey would be when fiat collapses, and it'll happen. Russia, lower left hand side. Russia launches gold contract, takes on LBMA benchmark. That was a news item, and we're going to go through that. And the lower right hand side, Standard Charter is talking gold and is bullish. A rather benign analysis by Standard Charter with big implications. So let's start with the markets. We'll throw some charts up there while we're doing that. 10-year yields are down almost 5. The dollar is 98.04, down 40. The downtrend resumes. Okay, S&P 500 is up 15, 63.12. The VIX is 1689, up 49. Gold is 33, 73, 74. Very active on the highs of the evening, I think 24. Silver 38.49, up 35. For my taste, disappointing compared to gold, but who's going to be? I'm not sad about it. Copper 557, up almost 6 cents. That's a lot. WTI 67.14, down 10. Natural gas massive, down 5%, down 17. Bitcoin 118K, finally moving up a little bit in comparison to its younger brother Ethereum, which is up another 1.5% at 38.20. Palladium, platinum leading everything. It's like buy all the things. Start with the white metals and then just buy everything else. Palladium up 14, 1269. Platinum up 19, up 20. So, gold is like the big mama that's calling everyone higher now. That's what's going on. You can't have platinum go to 1,400 without palladium catching up. Palladium is going to be the bigger beneficiary of EVs being put on the side. Anyway, I'm not telling you to go out and buy it. I'm just telling you all the metals have a relationship under God, in earth, and in industrial use. And they're all going to rise as long as gold stays up here. Gold silver ratio down a little bit. Grains mixed with wheat, the weakest. Wheat, the only strong market. First story, Standard Charter talking gold, and it is bullish. Now, we go down a rabbit hole in this post here. It's actually a very simple analysis. We like gold because of this, this, and this. But we're going to throw a layer of a rabbit hole here for you. So what is this? What was that report? It's a nicely put retail piece extolling the virtues of gold, aimed at English-speaking investors with little exposure to gold, published by Standard Charter. Why is this piece significant? Other than the really nice graphics they have, SC is an older bullion bank that has largely changed focus over the years. Modernized is the word. Currently, they are very crypto and stablecoin focused. The bank is also extremely well positioned in the emerging Hong Kong stablecoin ecosystem. I read it. We shared the analysis, and I had a quick talk with Eric Young about that. Hong Kong is really just ramping up to be the portal for gold into the East. Anyway, that was 3 weeks ago. Now, Standard Charter is talking about gold once again to retail clients in an introductory way. Maybe it's nothing, but this is the rabbit hole. A little while back, another bank, HSBC, in 2024 developed a regulated tokenized fractional ownership product for physical gold in Hong Kong. It's fully backed by allocated bars, accessible via digital banking, and protected through advanced ledger tech and emerging quantum security. Anyway, the banks in China are preparing for a tsunami of gold demand at the retail level. This is how they intend to capture it in combination with China, savings accounts that can buy gold directly, insurance products to put people into gold as opposed to bonds, and nationalistic monetary policies, which are at the root of de-dollarization in these countries at the grassroots level. Top down, it's pretty obvious. We don't want our wealth confiscated. Bottom up, it's like, hey, the dollar's not good for us anymore. Buy locally, buy our own money. That's the first story, and that full analysis is in the Premium Post, Standard Charter Talking Gold, and it is bullish. Next story, a news item, right? Russia launches a gold track, takes on the LBMA benchmark. Those aren't our words. I mean, there are words, but we're not the only ones saying that. Russia, the world's second largest gold producer, will begin trading physical gold on the St. Petersburg International Mercantile Exchange, the SPIMEX, by year end in a strategic move to establish domestic price benchmarks and reduce reliance on the London's LBMA bullion benchmark. The shift is part of a broader strategy to assert economic sovereignty. Excuse me. The launch of domestic gold trading follows Moscow's 2023 creation of the Institute of Oil and Gas Initiatives, a parallel to the US-based API Institute. In both cases, Russia is challenging Western control over pricing infrastructure for critical commodities. Russia's move also has geopolitical implications. By using SPIMEX, the country is building an alternative to Western clearinghouses, which in recent years have demonstrated a willingness to freeze sovereign assets. SWIFT is viewed as a Western clearinghouse in this concept. Unlike the UK and US, which house substantial foreign gold but often restrict its movement, Russia stores its reserves domestically. The full analysis is in the Goldfix Newswire post called Russia Launches Gold Contract, Takes on LBMA Benchmark. Now, there's a couple concepts I want to touch on here that have come up in the comments in a couple posts that I did about the gold being mined locally and sold to central banks locally. And those comments were related to the CNBC concept that, well, if you mine the gold locally and you want to have it in a central bank, you still have to add an extra refining process to make it LBMA, London Good Delivery, LGD, I think it's called, London Good Bars. And so there are specs. There are global specs, right, that must be uniform for the commodity to be fungible back and forth. And that's all valid. The CNBC comment pushback against, they're wasting their time anyway, only makes sense if they expect the gold to go to London. Only makes sense if they expect the gold to be sold in the West. It's not going to be. They seek sovereignty over their own gold, over their own money. And part of that, as something we've discussed here before, is once the supply chains have migrated and you control your own supply chains, you need to get the payment chains organized. And part of the payment chain is pricing. Our exchange has it. Another part of the payment chain with regards to gold is Standards. This is something that's more obvious in natural gas, where you have to have a standard that's globally accepted. The East, from these moves, is saying, we don't care about your standards. We have standards that are just as good, and we have half the business. So you keep your London Gold bar standard, and we'll have our Shanghai standard. Look it up. Over the last 5 years, refineries have been going up in Saudi Arabia, and they're creating standards for bars over there. It's not to say they can't make London Gold bullion standards. They can. They just have to be certified, and they are certified. The point is, when you're trying, not when you're trying, when you seek possession and control over your asset, you do what I described. But when you seek to have it come out and have everyone be able to use it, you compete on pricing. That's the exchange. You compete on standards, and that's creating your own set of standards, and you create a brand. You create a reputation. It's not London Gold standard. Who cares? We're not going to London. And if we have our own refiners, we could make our own standard here, which is already accepted by, that's where the gold is. Like the Brics have the gold. The Brics are buying the gold. Their standard matters. Yeah, sure. London Gold bar standard is not going away. But if the LBMA is shrinking in importance, and the LBMA is shrinking in importance because they don't have gold that's readily available, then their brand is damaged. And if their brand is damaged, who's to say that their standards are not up to standard? Let's assume that they are. Of course they are, right? Of course, I can't believe I'm saying that, but of course they are. But we don't need your refiners. We don't need your pricing. We have our own. This is, the kickball being taken home. The plant that makes the kickballs is taken home. The plant that standardizes the kickballs is taken home. It's like separate but equal. And that's what the West has done by violating the trust. Anyway, that story, I think as mentioned already, is in the Goldfix Newswire. Moving on. Related post over the weekend. Founders, the next equity thing is here. We feel very strongly about that. And under Biden, there were rules and acts that were passed, the IRA being one of them, that had very focused, beneficial tax policies towards chips. Under Trump, there's a different vibe going on, and it has to do with depreciation. There's other things going on, but the one that is identifiable is depreciation, and it's going to create a lot of opportunity, I think. Right now, there's a lot of opportunity. Hard net long gold is an anarchy hedge. I mentioned what that is: gold intrinsic value, how not to be a turkey. And WGC gold mid-year outlook. Interesting in that they're not throwing water on gold anymore. It's almost like the LBMA is exerting less influence over them. That's how it works. Data on deck. Powell speaks this week. There's something going on about a leak and the whole Powell Trump thing. It's hitting the tapes right now. But that's it. There's a lot of data this week, but I wouldn't say it's critical. Anyway, market check. Things are pretty much where we left them. Just touch on gold. See the top right-hand side there? It's still in the range, right? And the founders discussion that we had over the weekend, the CFTC discussion, we saw signs of bullishness. And we're not married to it, but if you're looking for a reason, when the 50-day moving average turns up, you would get long on a breakout above recent highs, like right now is recent highs. That's gold. Lower right-hand side, silver. See the Bollinger Band chart? For those of you that follow or watch that stuff that I do, notice fourth, fifth day, the momentum stopped, but the trend continues. So it's a different kind of trade now. Bitcoin and Ethereum are strong. Interesting that they're tracking metals, or metals are tracking them. Interesting that crypto, for different reasons, is behaving like a commodity or a dollar hedge. and less like a tech stock. Anyway, that's it. I'm Vince. Have a great